Section 5, Planning and Recording Depreciation Adjustments. So the current assets is cash and other assets expected to be exchanged for cash or consumed within a year. Plant assets are assets that will be used for a number of years in the operation of a business. Example, computers, cash registers, sales display cases, and furniture. Depreciation expense, the portion of a plant asset's cost that is transferred to an expense account in each fiscal period during a plant asset's useful life. 3 factors in calculating the annual amount of depreciation expense for a plant asset. 1, the original cost. All costs paid to make the assets usable to a business. Costs include the price of the asset, delivery cost, any necessary installation costs. 2, estimated salvage value is the amount an owner expects to receive when a plant asset is removed from use. This may also be referred to as the residual value or scrap value. Factor 3, estimated useful life. Number of years of useful life must be estimated. So there's 2 factors in this case, physical and functional. So the physical depreciation caused by wear from use and deterioration from aging and weathering. The functional depreciation occurs when a plant asset becomes inadequate or obsolete. So we have the straight line method of depreciation, which is changing an equal amount of depreciation expense for a plant asset in each year of useful life. So the straight line method is original cost minus estimated salvage value equals estimated total depreciation expense. Then we will take that divided by the estimated useful life, which then will give us the annual depreciation expense for each year. Here's an example. On January 2nd of 2011, Hobby Shack bought a lighted display case for $1,250 with an estimated salvage value of $250 and an estimated useful life of 5 years. Use the straight line method. So we will take our original cost minus the estimated salvage value to get our estimated total depreciation expense. So our original cost is $1,250 minus estimated salvage value, which is $250, which then gives us $1,000. Then we would take the $1,000 divided by the useful life, which is 5, which would then give us $200 for each year. So this is $200 for year 1. Accumulated depreciation. The total amount of depreciation expense that has been recorded since the purchase of a plant asset. So the depreciation expense that has accumulated over all prior years is determined. Example, it's the 3rd year. So we take year 1 plus year 2 to give us the 3rd year. So year 1 was $200, year 2 is $200, so we have $400. Depreciation expense for the current year is calculated is $200 is for the 3rd year. So step 3, we would take the prior accumulated depreciation, which is our $400 of year 1 and 2, and the current depreciation expense are added. So we take 400 plus 200, which would then give us $600 for accumulated depreciation. Book value of a plant asset is the original cost of a plant asset minus accumulated depreciation. So in this case, we take our original cost minus the $600 give us the ending book value. Analyzing and recording adjustments for depreciation expense. So we have our accumulated depreciation increases on the credit side, which is connected to the depreciation expense, and all our expense accounts are a normal balance on the debit. So our work together, step 1, this would be the third page. So flip to the third page. Step 1, calculate depreciation expense for a computer printer costing $1,600, estimated salvage value $100, useful life 5 years. So we would take our original cost minus the estimated value. So we have 1,600 minus 100, which then gives us $1,500 for our estimated total depreciation expense. Next, we would divide by the number of years, which is 5. So our annual depreciation expense for each year is $300. Step 2, calculate the book value of the computer printer at the end of its second year. So our original cost, $1,600, minus the total of year 1 and year 2, which is $600, because each year is $300, which will give us the book value of $1,000. All right, step 3, we go to our worksheet. So flip back a page. On December 31st, Coastal determined the total depreciation expense for office equipment is $6,120, store equipment $5,060. Plan the worksheet adjustments and label them F and G. So our first step is, this is for a depreciation expense. Office equipment is $6,000. We put that in our debit side here. And for our store equipment is $5,000, and that's on the debit side. Then, since these are adjustments, they always need someone to match. They would go up here for our accumulated depreciation of $6,120 and $5,060. Then, for our balance sheet, we take our trial balance of the credit plus our adjustments of the credit to get our balance of $18,000 and $20,000. And that was section 5.